The US stock market is trading at the highest levels of the year, anticipating fresh data on the US economy. The key stock indexes closed with the minor gains yesterday. Today, the market got to know positive economic data from the United States. According to the report from ADP payroll processor, the US private sector added more than expected jobs in May. Such upbeat data paves the way for the key stock indexes to conquer new peaks. For example, the S&P 500 climbed to 4,290. The index is expected to trade in the corridor of 4,250 to 4,320. To sum up the recent macroeconomic metrics, they all have something in common. In fact, they prove a boom in the housing market, in car sales, and in the manufacturing sector. Hence, we are betting on further growth of the US benchmark stock indexes. Yesterday, the US dollar traded higher against rival currencies. Despite a modest advance, the technical outlook for the greenback is bullish. Its index stands at 92. It's likely to trade in the corridor of 91.70 to 92.30. Meanwhile, the market has found fresh evidence of rising inflation in the US. In any case, the US Fed has halted a year at this pause to take crucial policy decisions. The only option for the regulator to resort to is to tighten its monetary policy. Such prospects are sure to provide the US dollar with a solid support. The greenback is asserting strength against the Canadian dollar. The USD CAD pair climbed to 1.2380. It's expected to trade in the corridor of 1.23 to 1.2470. Having found strong support at about 1.2280 and 1.23, the currency pair is ready for a further rise. The growth of the USD CAD pair is more probable in case of a sharp downward retracement of oil prices. Bitcoin fell short of our expectations. Most analysts were betting on Bitcoin's strength, but it has not happened. The number one cryptocurrency dropped to $34,600. To ensure an upward move, the price has to trade firmly above $35,500. Meanwhile, Bitcoin is capable of holding below $35,000. That is confirmed by technical analysis. Investors are longing for macroeconomic data. Today, market participants cheered ADP non-farm employment report for June. The US labor market created 692,000 new jobs, excluding farm employees. The employment growth came up to optimistic expectations. The report proves that the labor market is again getting into gear after a temporary slowdown in April. Experts reckon that the US stock indexes can close with a strong gains of almost 1%. Notably, robust hiring in the US private sector is another widely argument for the US Fed to venture into tightening monetary policy. And that's all for today. We keep monitoring the financial and market situation. Subscribe to our channel and see you tomorrow.